Bitcoin just broke above $81,000, first time since January. Last time it crossed this level, it ran 40% in 8 weeks, but here is the thing. The setup is completely different this time. Different macro, different risks. So today I am laying out the bull case and the bear case for Bitcoin through the rest of 2026. No hype, no hopium, just data. By the end of this, you will know what smart money is doing, where the key levels sit, and whether you should be buying, holding, or getting out. So where are we right now? Bitcoin, $81,200, up 4.2% in 24 hours, up 8.1% on the week. Key support sits at 78,000. That is the exact zone where buyers stepped in during the April correction. Above us, resistance at 85,000. Bitcoin needs to clear that level for any shot at a new all-time high. Now here is what caught my eye. 24-hour volume is running at 17.1 billion, well above the 30-day average. This is not a low liquidity pump. Real money is behind this move. What actually caused this breakout? 4 things hit at once. First, ETF inflows. U.S. spot Bitcoin ETFs pulled in $1.8 billion in 7 days. Strongest weekly inflow since March. BlackRock, Fidelity, ARK, all net buyers. Second, the Genius Act, signed into law last month. Stablecoins finally have a clear regulatory framework that removed a massive overhang that had been sitting on this market for years. Third, the halving supply squeeze. Miner rewards got cut in half in April 2024, and historically, the biggest price moves come 12 to 18 months post-halving. We are right in that window. Fourth, the Strait of Hormuz. Military escalation triggered a flight to digital assets. Bitcoin is increasingly behaving like digital gold when geopolitical stress spikes. The bull case. 5 data points. 1. Exchange outflows. 28,400 Bitcoin left exchanges in the last 30 days. Coins moving off exchanges means holders are shifting to cold storage. That is accumulation, not selling. 2. Whale accumulation. Wallets holding more than 1,000 Bitcoin added 12,300 coins this past month. The biggest players are adding, not trimming. 3. MVRV ratio, 1.85. Anything below 2.0 is historically not overheated. Last time MVRV was this low during a rally. Bitcoin ran another 60% before topping out. 4. Total ETF assets under management across all U.S. spot Bitcoin ETFs, $128 billion. Institutional allocation is still early innings. And 5. ARK Invest, Big Ideas 2026. Their bull case target, 120,000 to 150,000. That is not a guess. It is built on on-chain fundamentals, network adoption curves, and historical cycle analysis. Now the bear case. And you need to hear this because ignoring risk is how you blow up. 1. Strait of Hormuz. If this escalates further, we get a full risk-off move across every asset class, crypto included. War fears do not care about your on-chain metrics. 2. Leveraged longs. Open interest sitting at $8.2 billion. That is elevated. When the market is this leveraged to the upside, one sharp dip triggers cascading liquidations. We literally saw this in April. Bitcoin dropped from 83K to 74K in 48 hours. Same setup. 3. Historical rejection. Bitcoin has tested 80,000 4 times now. 3 of those 4 rejected, sold off. This is a proven resistance zone. 4. Recession risk. Goldman puts U.S. recession probability for second half 2026 at 35%. Economy weakens, risk assets sell. Simple as that. So what is smart money actually doing? Bull side first. Strategy, formerly MicroStrategy, bought $420 million of Bitcoin in May alone. Mara Holdings added another $180 million. ETF net inflows month-to-date 2.1 billion positive. Bear side. Some hedge funds are trimming, taking profit, and derivatives open interest is elevated, which amplifies volatility in both directions. Net picture. Buyers outweigh sellers by a wide margin. Institutional conviction is strong, but the leverage in the system means the road up will not be clean. Expect chop. If you are watching from Australia, pay attention here. ETH on Cboe Australia, $42.80, up 8.5% month-to-date. VBTC on the asks, $58.20, up 6.1%. AUD to BTC rate, 126,400 Australian dollars per coin. And here is something most people miss. The weak Aussie dollar is actually amplifying your gains if you hold BTC-denominated assets. Quick tax note. If you have held your position longer than 12 months, you qualify for the 50% CGT discount. That matters at these levels. Hold for the discount or sell now and pay full CGT. Know your numbers before you act. My verdict, cautiously bullish. The weight of evidence favors the bull case. ETF inflows strong, on-chain metrics healthy, smart money buying, but the bear risks are real. Geopolitics leverage historical resistance at 80K. You cannot ignore those. My approach. Accumulate on dips towards 78,000. Do not chase the breakout at 81K. Let it come to you. Levels to watch. 78,000 support. If it holds, we go higher. 85,000 breakout level. Clear that and the path to a new all-time high opens up. 92,000. That is the bull target. If this was useful, subscribe to AI Unchained. We put out daily crypto and equities intelligence, and the same report generators I use are available on Gumroad. Crypto Intelligence Report Generator. Global Equities Report Generator. Links in the description. Stay informed. Stay ahead. Do your own research.